Happy Friday, traders. It is 8:02 a.m. Chicago time, 9:02 Eastern on the 17th of August, 2018. Thanks for joining me again. Here we are at the end of another glorious summer week. A lot of activity this week. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a slight risk-off sentiment with allocation moving most aggressively to crude oil. That market's up 1.1%, trading at 65.60. The Japanese yen up 41 pips. The euro remarkably up 450 ticks on CPI data this morning. The U.S. Treasury bond is up 10 ticks. The laggard this morning is the DAX down 100 points, 0.83, followed by the Euro stocks, and the S&P is trading at negative 6 points or 0.21%, trading just in range just below where it closed yesterday. That's the overall sentiment in the market this morning. As far as what could interrupt our auction today, we have U.S. leading index coming out at 10 o'clock Eastern for July, expecting 0.4. And a market mover, University of Michigan Confidence, the prelim number for August, expecting 98, and that ends the week in terms of economic releases. And that's what we've got to look forward to. Let's take a look at what we expected yesterday. The primary expectation yesterday was for the market to continue higher to make a small attempt at filling the gap zone. The market was trading at 28.35 or so when we were talking last, and the expectation is it would leave a gap zone below and continue higher with a key test of 28.43.75. Remember, that's that fugly top from the composite. Multiple tests up there, 43.75, 43.50, and so on before the gap down. The expectation is it would break through, get a flush into or a push into 28.47.75 at least. And that's basically what it did. Can't say that it was super easy to trade. Here's what actually happened. This is what it looked like. We opened up at 28.35. The first clue we had yesterday was that the market was just unable to extend the opening swing low lower. So the gap, after 1 hour of being open, the gap had a low probability of getting filled. And I think I did a statistical study recently on that. And so what we have is a market that extended the opening swing high, was clearly a caution for shorts, and it pushed through 47.75, the mid of the gap from the 10th, very cleanly, didn't even pause there, and pushed all the way up to 28.51.75, just 2 ticks below where that gap is, where the gap zone high is. So the gap zone remains. We have a new gap zone below us. For some reason, it didn't populate here. And then the market just drifted sideways and then started to retest yesterday. Once it broke the IB high, if we didn't catch this little nugget right there of a trade, didn't catch this. I found it difficult to find a spot to get long into the push into the gap zone. Remember, gap zones are like low volume nodes. They tend to trade through. And then after that, it rested, and then it started to rotate below the mid and so on. And we finished up with basically a weakish high, not such a great low, an elongated profile with some consensus in the middle. The value area today is valid. And we are currently trading below value in range 28.3850. The overnight low was yesterday's open. And we are hovering around last week's close. So in a week, we dropped 40 points or so, and we came right back. And here's last week's close. We're right on top of it, 28.3750, trading 28.39 even. The overnight session, not much to talk about here. Drops down, breaks up, trades in the middle of yesterday's close, drops down, retests the mid right here, and it extends lower. And here we stand on a almost perfectly Gaussian profile. With opponent control at the low end of the range, just barely having moved from here and here. So fairly evenly distributed profile, 168,000 contracts, slightly higher than what we would consider to be the mode for the Globex session, the extended hours. But overall, not very descriptive, other than the fact that it spent most of its time inside. The market spent most of its time inside of the value area until this morning. Not much to say about what expectations today. Before I get into that, though, I want to talk about the overall big picture, right? The composite. So this chart shows 1 day per. Let me adjust this. This shows 1 day, 1 RTH session per bar. So 1 pit session per bar. And this is the big picture chart that I'm using to track what is happening overall. This is what I talked about yesterday, 2720. We've moved away from it for some time. We're in this up channel, and we're swinging top to bottom on this up channel, like that. To me, the bulls are very healthy. To me, it looks like the high of 28.84 is likely to be taken out. We've gapped down. We closed the gap yesterday almost. We've left a gap behind. We spiked down. We tested down and pushed back up. Overall, I think shorts should be cautious. Sellers are running for the hills, and that's how things are set up. Given the overall risk sentiment coming into today, I'm expecting a fairly quiet Friday. Let's take a look at our plans for today. Let's kill this clean downward channel after the top was put in yesterday. But before I do that, I want to remind you, it is like Friday. Please take a moment to find and hit the like button on YouTube. Before you leave today, it might require you to log in. Please do so if you can, and just hit the like button just to help me out. Boop, boop. Initial scenario. Yes, today's options expiration day for the weeklies and the monthlies. And don't forget, the crude oil is trading October today, so you should be trading CLV8 with a premium of negative 58 cents. It's in backwardation. The October contract's trading cheaper than to the September contract. This morning, I'm looking for an open auction yet again. A lot of open auctions because we're in this huge balance. And I'm looking for a test lower to 28.36.35, potentially test through 28.34 into the gap. I'm looking for an impulse higher that gets us back into the point of control, into the close, all the way to the overnight high, and then potential for a steady hold with a profile that's going to look very much like a multi-distribution profile today. That's the primary scenario. Upward bias overall on the for the continuation. If that fails, if we fail to come back into the range once we test lower, it gives us scenario two, open, respond, impulse down. Remember, the impulses are important. Impulse down, try to come back in and then begin to drift. If we do drift, then I'm looking for 28, 27. Again, for a small squeeze, and then hold in the gap zone. That's the secondary scenario. Okay, we have a gap up a day yesterday. Uh, we had a gap up day yesterday, and if we start to recover some of that gap, we're likely to push all the way through. Okay, so those are the two key scenarios. The third scenario is a trend up scenario. Fourth scenario is trend down scenario that pushes us into 28.11, and that's all she wrote. Okay, again, it's Friday. Okay, you want to be the person stalking your trades and allowing the market to come to you. Remember, when the wolf is hunting sheep, the wolf doesn't jump in the middle of the sheep and watches them disperse. The wolf sits on the sidelines and waits for an opportunity, waits for a stray lamb or something, and jumps on that opportunity. And you, as a trade stalker, hence the name stock zones you see on the screen there, as a trade stalker, you're doing the same thing. If you jump in just helter-skelter, you're going to find that you don't really have a plan. Things get scattered, and you're just chopping yourself to pieces. The wolf becomes a sheep. Remember, people, be the wolf. Be the wolf. Okay? So, also, part of being the wolf is not to give your money away on a Friday before the weekend. Things are likely to slow down. We're still in the middle of summer. School starts in 2 weeks. We're still in the summer. So it's very likely that we'll get whatever the intention of the market is done, whatever the main intention of the market will likely be taken care of early, and then it's likely to get choppy into the weekend as people leave early. Okay, so be careful. Good luck, and I'll catch you on Monday. Take care.